Hello everyone, I'm Rakshit Pai and in this video I'll explain how to diversify your stock portfolio. I try to manage my portfolio just like any professional portfolio manager would and have been doing it for over half a decade. And what I observed is that with proper diversification I can minimize my risk extremely well and maybe improve on returns too. So in this video I'll explain how you can diversify your stock portfolio. Before getting into the video, check out the link in the description. I have written a detailed article over DU Digital Global. It's an upcoming SME based IPO. Check the link if you're interested in investing in the company. Let's get into today's topic. There is a famous quote by a noble individual. It says, if you are an astrophysicist and you have known every inch of planet Earth, then the concept of finance is all there is in the observable universe. And stock market is just a Milky Way. So what's to learn is almost unlimited. What we know is what we see from our perspective and may not be the complete truth. There is no one perfect strategy, no one perfect method or way to approach investing. In fact, it goes like this. What works and makes the most amount of money and sustain through the various market conditions is the best way to do it. So how to diversify your stock portfolio such that you can make the best use of it? Your portfolio should have two important aspects. Number one, broader reach. Investing in a broader market will help you balance your portfolio. It is investing in the entire market. Thus, this type of investing will give strength and stability to your portfolio. Here, you must invest in ETFs, index funds, basically such instruments that concentrate on the whole of Nifty 50 or Sensex. Number two, concentrated portfolio. As much as it is important to have a wide varied investment, it is also important to own a concentrated portfolio. Here you are investing in those companies or sectors that you are familiar with. It can be like investing in large cap or blue chip companies, or investing in mid cap or small cap companies, or it can also be investing in a particular sector or like FMCG, banking, etc. because you have a considerable advantage over the sector due to some insider knowledge, passion, interest or such something you are familiar with. What I do is I have segregated my portfolio into three parts. Part 1, growth investing. This is my core portfolio. These are those well established, well financed and companies with monopolistic nature. They in some aspect define where the market is heading. These are large corporations which grow over and above India's real GDP rate, and they give an amazing strength and balance to your portfolio. This is my core portfolio where I have allocated 35% of my entire portfolio. Part 2, value investing. This is your value oriented portfolio. These are those companies that you find value for money. They are diversified and allocated based on their strength and weaknesses. These companies, if all goes fine, have the capabilities to become a great wealth accumulator. Remember, valuation is a perspective, an idea of what the company could be worth in future. Valuations are the story we investors tell to ourselves based on the company's past performance, present action and future capabilities. And this is my value investing portfolio where I have allocated 35% of my entire portfolio. Part 3, broad market investing. As said earlier, broad market investing is important because I believe that they give a strong sense of balance and strength to your portfolio. Imagine investing in individual companies that you find value in and then invest a small chunk of your portfolio in a broader market. Because we don't want to drift away from the market in its entirety. We must also have a share in the market, that is entire market, because that's what we are trying to achieve here. And this is my broad market investing portfolio where I have allocated 25% of my entire portfolio. The balance 5% will be in cash position. We must have at least 5 to 15% in cash and cash equivalents. This way, with a sudden mishap in the market, you can invest more into those that you find a bargain. Remember, cash is trash for a bull market, but in case of bear market, cash is king. If you want to know more about my portfolio, check out the link in the description. I have attached a 30-page PDF where I have shared my current portfolio, weightage of each company and returns I have earned. Check out the link in the description. That's it for today. Thank you for watching.